We have come across so many of our borrowers who tell us that we were borrowing at 5% per month, 6% per month, going up to 10% per month, almost doubled from 2.5 lakh crore to 4.5 lakh crore. It has to be very productive, and the second and third generation should be more than willing to contribute. In 1 year, her sales doubled. She was earning 10,000 rupees per month. She started earning 15, 16, 17, and ultimately 20,000 rupees per month with that 1 lakh rupee capital. She doubled her income. Out of 100 businesses that start, 98 fail. Imagine paying 60, 70, 80% rate of interest on a loan. So it is a debt trap. Because see, once you deploy that capital efficiently, you start earning, your confidence grows.
Yeah, I was really surprised to know it has 300 million users.
Yeah.
And it is one of the top 20 socializing apps in the world. It is there in that list, and it is Indian.
Here we have flat premiums, 3,000 rupees whether you're 18 years of age or 65 years of age.
Correct.
We are not charging you differential premium depending on your age. Everything is covered. Even before you start, are stacked against you.
Correct.
So you're trying to be amongst that top 2%.
In today's podcast, we invite Mayur Modi, the founder of MoneyBoxx. MoneyBoxx is a micro entrepreneur lending NBFC. They actually work with micro entrepreneurs and farmers on ground to understand their problems and help them figure out how they can make their businesses better, source money for good, and also how interest rates work for them. MoneyBoxx is democratizing credit for micro entrepreneurs in this country. I think we have a lot to learn from Mayur Modi's journey from being a banker to turning into an entrepreneur of an NBFC. I will not take any more of your time. Mayur Modi right here at Build From Scratch, episode 3. Let's go. Okay, sir. Hi, how are you?
I'm good.
How are you feeling today?
Not bad. Had a long day.
Long day.
Yeah.
So before we talk about MoneyBoxx and Mayur Modi, I just wanted to start off with a very relevant and existing topic that has been around. It is regarding India opening up its agriculture market to the US. And I want to understand its implications on agriculture. What are your thoughts?
Yeah. It's the topic of the current topic. It's a very hot topic, and it's what has been driving a lot of political backlash both here and I think especially US. I think that's one of the key things where I think that trade negotiations have kind of taken a little backseat. And I think US is very keen that we open up our agricultural sector, because they are very keen to bring in their products, their technology, their cheap,
Right.
Grains.
Right.
And it has a far-reaching impact on India, and India has been very, very protective about its
Right.
agricultural, its farmers, because if you take the Indian economy, I think 50% of the economy is still driven by agriculture.
Okay.
There are millions and millions of people who kind of dependent on agriculture for their livelihood, and anything that the government does, it's a political hot potato in India, right? If you touch anything related to farmers and their rights,
Right.
it becomes very, very difficult for any political party or establishment to take a call. I think India tried doing something 3-4 years back. There was a lot of backlash,
Right.
and it had to take back. I think there's a similar sentiment around that whether we should open up, how much we should open up,
Right.
because I think there are merits and demerits in the arguments, right? Because
Right.
whilst you need to protect your farmers, your agricultural, but you also need technology, right?
Correct.
Because
Correct.
it is very important, because without technology, I don't think so agriculture is that productive
In
India, right?
Okay.
We are using archaic technology, we are using the old methods of farming.
Right.
The yield per hectare is not great in
It's not
India. It's not great, and we still have to feed a huge population, right? 140 billion, 1.4 billion people.
Right.
It's not a small number to feed.
Sure.
So there are merits and demerits, but I think a balance has to be a balanced approach needs to be taken. At some
Right.
point in time, you need to open up little bits,
Right.
but making sure that your existing farmers and the agriculture becomes more competitive, and then you start opening up. That's how I think is the
Hmm.
way to go.
Hmm.
But it's not an easy thing to do in India.
Hmm.
I think opening up, especially anything you touch related to farmers, it's a very very difficult thing to do.
Hmm.
Any
Right.
any reforms that you want to do in the agricultural comes with a lot of risk, and you need a lot of political capital to be able to do that.
Okay.
I think this government and dispensation has that political will.
Hmm.
It just wants to make sure that it gets the best deal out of it. When it opens up the right sector so that capital can flow into the agricultural
Right.
sector,
Right.
so that the farmers can benefit. The technology has to flow into this sector,
Right.
right?
Right.
On the contrary, it also opens up some of the specialities that India has, like spices, some of
Right.
the fruits, where they can kind of export to these
Right.
countries
Right.
also, right? When the tariffs go down.
Right.
So it's not like it's a zero sum game. It's a win-win situation. It's just that you need to be very calibrated in your approach when
Right.
you're opening up any sector, and
Right.
especially agriculture.
Right. I understand that a lot of small farmers will be affected if this happens.
Yeah.
What are those implications of small farmers, and how does the farmer producer organization help in that?
See, I'll tell you what. If you look at the land holding parcel in India, right, 85% of the land holding
Hmm.
it is with small and marginal farmers.
Okay.
When we say small and marginal farmers, we say anybody who holds less than 5 acres of land, right?
Okay.
So it is that fragmented. The flip side of that is that if you're that fragmented, you lose, buying power, right? You lose negotiations,
Right.
with any, let's say, multinational or whatever
Right.
organization they are trying to deal with. I think FPOs come in play. They act as a middleman between the farmers
Yeah.
and the larger organizations,
Hmm.
so that they get a fair price for their produce,
Hmm.
and they also ensure that there is continuity in the supply chain. Right? That
Right.
becomes very important.
Right.
So FPOs, like to some extent, like the milk cooperatives, right?
Right.
Where they take care of the interest of the farmers,
Right.
and also ensure that you get a fair price
Right.
for the produce that you're having. Otherwise, small farmers are very very marginalized in terms of their bargaining power when it comes to selling their produce in the markets.
Right.
Right. So it becomes very important that you have a conduit, you have a vehicle somewhere
Hmm.
where these are all organizations which are constituents of farmers, right?
True.
So all farmers come together and they become a large block.
Hmm.
For then they are able to negotiate better
Hmm.
in terms of the price that they want to sell,
Hmm.
right? So it is very important that the FPOs are more enabled.
Hmm.
They are given more power. They have more, what I say, skin in the game
Right.
when it comes to negotiating the interest of the farmers.
Right. I also feel that the start of India really opening up its agricultural sector, which brings in capex, which brings in technology,
Right.
which will help our agriculture sector to have access to new and better technology in the long run. It starts with privatization, is what I feel, because I think that was the first block that we tried to really, uh, move forward from it in the last 3 to 4 years. But the government was not really able to move forward with that idea. What does privatization do? How is privatization affecting the overall supply chain? Understanding that there will be a revenue loss for the government, because currently the mandis and the structure that works in agricultural also helps a lot of states to make a lot of non-tax revenue, which is huge. In like Punjab is the top
Yes.
revenue generator in that
Right.
sense. How does the government cover this revenue loss, and will technology actually in the long run help the government more, or are they looking at the short term benefits by not allowing privatization in this sector?
See, there are two ways of looking at it. When you say privatization, as in, because what is happening is most of the farmers, which is the belt around north belt, which is, let's say, Punjab, Haryana, and to an extent UP,
Right.
right? The cash crops, which is basically your kharif and wheat crops,
Right.
right? That is something that is what they produce,
Right.
right? And that why they produce that, because obviously one, there is a demand, two,
Right.
there is a support price which is guaranteed by the government.
The MSP.
Yeah, the
Okay.
minimum support
Pro
price,
Right.
right? So when the government says that no matter what,
Hmm.
I am going to kind of pick this stock,
Hmm.
whether there is adequate demand, not demand, you have an opportunity to come and sell it to us,
Right.
and we will pay you X price per quintal, right? That is
Understood.
what it is.
Right.
So then it becomes like a vicious cycle. People want to only then kind of cultivate those crops,
crops.
because they know that this is the price that they will get. This is the
Right.
kind of cost of producing that
Produce.
crop, right?
True.
Ironically, if you look at it, government of India kind of supports with the minimum support price for a lot of crops.
Hmm.
But because of the fact that those crops don't come to the mandis, some of these crops directly go to the private organization because they get a better price there, right? So the government is giving, let's say, X price, but the private organizations are picking it up at X plus something.
Right.
So they don't come to the government to sell those crops because
Right.
they're going and selling it to the private
Right.
organizations. What is so the argument in favor of doing privatization is you make it competitive, right? You
Yes.
just push the farmers not only to cultivate only one or two crops,
Right.
you kind of push them to cultivate multiple crops,
Right.
right?
Right.
So that it becomes more democratic in terms of it's a demand and supply kind of a thing. Market forces will take care of it. More competition will come. Uh, you know, uh, the multinational corporations will be more inclined to kind of invest in the warehousing and procurement
Right.
of those, because they don't have to pay a certain price because government has determined a certain price for
Right.
picking up those crops,
Right.
right? They will pick it up depending on the demand and supply what they foresee, right? So you make it more competitive. The farmer will also then decide, okay, fine, I would want to kind of go away from XYZ crop and get into different crops because I get a better output out of it,
Hmm.
right? So I think it is very important. It's just that a small cartel of farmers kind of don't want that to happen, and they want that control to happen in terms of the price support that they get, and that's the reason it's not getting broad based in terms of what can be privatized and not privatized. But it's a good thing that it should happen. Definitely.
Right. So what I have gauged is that if India opens up its market to the US, we get better technology,
Mhm.
we get capital inflow
Yes.
that is needed for, I think, the cold storage, the logistics,
Yes.
and everything that involves in the supply chain.
Yes.
The weakness would be that 85% of the land is owned by small farmers
Yes.
who are fragmented into many small areas. The buying power is not there, which might really affect their livelihoods, which I think the government needs to take care of. The opportunities are spices, fruits that we produce will they have better pricing?
They will have better opportunities to sell because pricing will become more competitive when you're selling, because
Okay.
these are some things that India can only export other than a few other countries.
Right.
I think the most important aspect is the milk dairy.
Okay.
I think India is very, very protective of its dairy industry because that is one of the success stories that has come out of India with the milk white revolution that happened
Right.
with Mr. Korean kind of initiating that. I think, and if you look at the rural household, right, uh, dairy becomes, or a livestock business is very, very core to those households, right? And if you open up that sector, right, one, you will have cheap imports of dairy products.
Okay.
The milk will become much cheaper than what it is today. So the price that it is getting sold today in the market by the Indian dairy farmers,
Right.
they will face a huge, huge loss if that sector opens up, right?
Cheap imports, do you think other countries are actually producing cheaper dairy products?
Huge. I think the difference between what India produces, the cost of milk production in India and US is vastly different.
Oh, okay.
The yield of, let's say, a cow or a buffalo in India,
Hmm.
and if you look at the yield of some of the Western countries, including US, is at least 2x to 3x,
Okay.
right? Per cow, that
Okay.
yield of the milk that they produce, right?
Right.
So obviously they are more productive,
Right.
right? And that is because of technology and other aspects that come into play,
Right.
and that is how they've been able to price their products cheaper. Right.
Right.
Once that sector opens up, a lot of these products will flood Indian markets.
Right.
So what will happen to the Indian brands,
Manufacturers, right.
manufacturers, small dairy farmers,
farmers.
because they will be out of the market in terms of pricing.
Correct.
Right?
Correct.
So that is a huge challenge. I think that is a huge risk which the government is trying to protect, and which is
Right.
rightly so. I think that they should do, because 50%, as I said, that Indian population depends on agriculture for
Right.
their income,
Right.
and a large part of that depends on the dairy income. Right.
Right.
So it becomes very important that you protect some of these sectors.
So what I also understand is that the sector needs to be protected, but first the sector needs investment and technology to really have the competitiveness
Yes.
to tackle imports.
Yes.
Once we feel we are there is when we open up our markets.
Yes, I think you have to make your local, so you have to nudge them. I think, see, they will not, it's not going to happen organically. I think there have to be policy intervention. There has to be some kind of programs that the government has to run to make your agriculture sector more productive, right? And for
Right.
that, you need reforms, right? And
Right.
that is what this government was trying to do, and that is where it got stalled. Right. So it's a vicious cycle, right? Because you want your sectors to be very competitive. I don't think so anybody is afraid of global competition in India. I think it's just that they need to be competitive. They need that capital, that technology to be able to come up the curve, and then you open it up. And I think we'll be able to compete with anybody in the world. Right? It's just that today I don't think so we are there. I think we lack of capital, technology, resources. And then you open it up, I think it will kill the sector.
Okay. It will be a very sudden shock, I believe.
Sudden shock, I think, and that is not something with the scale of the people dependent on that sector. I don't think so it's prudent for any government to be able to do that. It doesn't make sense.
Correct.
To be honest.
For someone hearing about MoneyBoxx for the first time, how can you explain it in a very simple way what MoneyBoxx actually does?
Think of it like, so let's say there's a small kirana shop owner in a tier 3, tier 4 town. Right. And he has a certain capital, certain savings through which he is running his shop. Right. Now, let's say if there's a festival season which is coming up and he needs more money to be able to kind of buy more stock so that he can, cater to that demand. Or he wants to extend that shop, he wants to increase his business. Where does he get that capital from? Right. Today, unfortunately, banks are not ready to fund the small micro entrepreneurs and small town, business owners.
Why?
Very pertinent question, because see, for them, they perceive them as a high risk, because what happens is when they look at these small entrepreneurs, there's no track record that they have. They mostly deal in cash, right? The buy and sell that they do is mostly in cash. They don't have very good collateral or a perfect collateral, let's say a land or a property, to be able to give collateral and take a loan on that. Right. So unfortunately, what happens is they are not able to scale these businesses. So for those kind of micro entrepreneurs, small shop owners, dairy farmers who want some kind of a capital to be able to grow their businesses, I think MoneyBoxx is what comes into play, and we are that bridge. Right. Between the micro entrepreneurs, what is the existing story that they have and what they want to be in terms of their ambitions. Right. So we fuel that ambition. So we provide that growth capital to them. To be able to borrow more, increase their business, earn more profits. And have a better lifestyle, ecosystem. So that is how you can think of MoneyBoxx. It is providing small growth capital to micro entrepreneurs in tier 3, tier 4 towns, which is the real India that you can talk about, where the heart of India actually resides. Right. It's very easy for anybody to get a loan or some kind of growth capital in a tier 1 or a town. Right. But the situation is very different in a tier 3, tier 4. People with 10 years of business running profitable business, right, still not able to get 2 lakh, 3 lakh rupees of loan. That is the situation. And there are millions of people like that.
Okay. I've always wondered, how do you differentiate between a tier 1 and tier 3 city? What what are those cities? Which cities come under that, and What makes them a tier 3 or a tier 4 city?
So tier one would be your metros. So
Right.
let's say Delhi, Bombay, Calcutta, Chennai, Bangalore. These are all tier one,
Of
right?
course.
Tier two
Very-
are like, let's say, a 50 kilometer, or they're kind of developed, right?
Right.
They have developed, but they're not as buzzing as let's say a tier one, like a
Right.
Delhi or Mumbai. It's a hub, right?
Hub. Right.
Uh, tier three is when you start going beyond 150, 200 kilometers from a main tier one city.
Can you name some of these cities? Which
Lots of them.
MoneyBoxx?
So let's say there'll be a Batinda, there'll be a Ujjain, there'll be a Devas, Mandsaur, Bhilwara,
Okay.
there'll be a Kota,
Kota.
Kota, there'll be a Salem, Madurai. So those kind of cities, right?
Right.
Where
Okay.
there is a lot of economic activity happening at the
Correct.
ground level.
Correct.
There are micro clusters of small SMEs kind of doing some kind of specialized work.
Correct.
But they are buzzing with a lot of activity, but it is not a tier one because it is still not developed to that extent in terms of potential that a
Correct.
tier one city brings.
Correct.
Right? So those are the places where we go. So we go into tier three, tier four, because there is where the real need for growth capital
Real
is.
infra. When going into these cities, as you said, banks consider a lot of small businesses high risk. How do you kind of cover this risk? Because even you are lending, and what is that risk covering strategy?
So it's challenging, right? Because obviously there's a risk. So you price your loans to cover those risks, right?
Right.
So if you get a loan in tier one, let's say a personal loan in tier one, let's say for 12, 10, 12, 13%, obviously you will not get a loan, and that is a business loan that I'm talking about, because we only give business loans
Right.
for 10, 12%, right?
Right.
Because obviously the cost of maintaining or reaching that customer is very high.
Right.
The cost of risk of that customer is very high, because they don't have that kind of a capital to be able to
Correct.
withstand any kind of an economic shock, right? Because
Correct.
they have very minimal capital, right?
Correct.
Their own equity is very, very small.
Correct.
So obviously you price it a little higher, I think, but more than the pricing, I think it is important that you are able to fuel that ambition and that dream
Correct.
of that small entrepreneur, right?
Correct.
Today, it's not that he's not asking for a charity. All that he's asking is for a fair chance.
Yeah. An opportunity.
And an opportunity,
Right.
right? What are the options that he has today? He goes to a bank, he's rejected. He goes to a larger non-banking finance company, NBFC, he's rejected.
Correct.
The only option left today is to go to a local money lender, loan
Correct.
sharks, right?
Correct.
And they squeeze him so hard, right? He gets into a debt trap,
Correct.
right? Because he knows that he has no other option. The only option is to come and borrow from him, which
Correct.
is like a money lender, and they charge him exorbitant rates, right? The rates, which I'm not sure whether he really understands that what is the real cost of capital that he's
Right.
borrowing,
Right.
right? What
Right.
and it is only interest servicing that he's doing on a month-on-month basis. There is no
Correct.
principal repayment that is happening. Even
Correct.
after end of the loan tenor, the
Correct.
principal is still outstanding, what he
Correct.
borrowed, right? So here we come as a responsible partner saying that, okay, fine, we understand there's a risk, we understand there's a business, we understand that you have profitably, you're profitably running that business.
Correct.
We are ready to take that journey with you, right? We will give you that growth capital at a decent rate, right? Obviously not at what banks can give, because
Correct.
our cost of borrowing is also high. So, but we will give it to you at a very decent rate compared to what you are borrowing today from an informal source like a money lender.
Correct.
And it is an EMI option that you have to pay 2 years,
Correct.
3 years, 4 years, depending on the loan tenor. And in 2 years, your loan is free,
Correct.
right? You repay everything, and whatever you had borrowed for, obviously you have invested that in your business,
Correct.
and you have grown your business. You're earning more profits,
Correct.
right? Compared to a, let's say, a loan money lender or somebody else who is giving it only on an interest basis,
Correct.
where the principal is still outstanding, right?
Right.
So
right.
we are coming and formalizing a lot of informal economy, which is
Right.
there
Right.
today, because see, capital is needed at every stage
Correct.
of life, right? So I think it is important to recognize that there is a potential and there is
Correct.
an opportunity, and we go there and then take that risk, calculated
Correct.
risk, saying that, okay, fine, we do our due diligence, we have our methods of understanding whether this customer is really going to invest in the business or not.
Correct.
What is the risk appetite of this customer, whether he
Correct.
has that acumen to be able to borrow and then invest in the business or not.
Correct.
What has been some of the track records? We do a lot of verification. We understand what is his standing in the community. So we underwrite that risk,
Right.
ultimately, right?
Correct.
So now we are specialized in underwriting that risk, and we take a call and then we lend to that guy.
Correct.
So that is how we do.
Correct.
And that is how we are filling that gap. So it
Right.
is the missing middle where we talk about the missing middle,
Right.
where in the top, either they are salaried people or people in tier 1, tier 2 are able to borrow very easily. And then at the bottom of the pyramid, there are microfinance institutions
Correct.
where you take group loan, right? Group loan is basically 5, 6, 7 people come together and they guarantee each other's liability, and then they take 60, 70, 80,000 rupees depending on what they are taking.
Correct.
Right? But these are very, very small micro entrepreneurs needing 2 lakhs, 3 lakhs individually. They don't want 10, 20,000 because that is not their requirement is. So that is a missing middle that we talk about.
Right.
We come and then fund those missing middles.
Right, right. So you don't fund the very lower
No, we
sides,
don't.
the very high sides, but that middle margin where
The
there
middle
is
market, yeah,
the
the,
middle
the
market.
missing middle. That is
Missing
what we
middle.
talk in terms of terminology, that this is the missing
Missing
middle.
middle.
And that is a very big chunk, to be
Chunk.
honest. Right?
Right, right,
And
right.
that is what we are targeting today.
And I also feel you mentioned about the informal economy. This is my hypothesis, you could correct me here, that when these missing middles do not find a way to fund their businesses, they might also look for these informal loans where there is a lot of cash loans involved.
Yeah, yeah.
And there is no proper, way to really understand what's happening there.
No. So I am telling you, we have come across so many of our borrowers who tell us that we were borrowing at 5% per month,
Oh
6% per month, going up to 10% per month.
Right.
Imagine paying 60, 70, 80% rate of
Of
interest on a loan. I don't think so. The business has that kind of a margin.
Right, of course.
Right? What business today will have a 60, 70, 80% margin to be able to borrow and then repay out of that business?
Right.
So it is a debt trap at the end of the day. They don't understand what is the true cost of that borrowing.
Right.
They borrow because they are in need of money. They want to invest in the business, but ultimately they are not able to repay back because it is not financially prudent to borrow at that rate of interest and then earn and then repay it back. And then they get into that trap.
Right.
And then it is like money is bad, borrowing is bad. I think that cycle continues, right? You have to be very, very prudent when you're borrowing from anybody, to be honest.
Yeah, and I think that that real mindset where borrowing is a taboo, it is bad. It starts there where you listen to these stories in tier 3, tier 4 cities where people might have borrowed at obnoxious interest rates of 70-80%, and then they're obviously not able to pay back because the business does not allow that kind of margin.
Absolutely.
And I think it's also a lack of awareness and education. Are you guys also into that to really make them understand how interest rates work?
No, I think that is the key. I think communication is the key. We don't use jargons. We don't say working capital loans. We say loans for buying buffaloes, cows, or loans for buying stock. Right? That is what we understand. But ultimately, a jargon is a working capital loan. Right? So I think the communication has to be very, very simple. It has to be very, very transparent in terms of what is he borrowing, what are the different terms and conditions, what is it that he's going to repay every month. And we have to be, and RBI is also very, very strict and they have done a fantastic job in terms of making sure that transparency is kind of communicated. There's a lot of transparency in what you charge, how you charge, and the customer should be aware of what is the total cost of borrowing, right? Including all charges, because the rate of interest might be X, but there will be a lot of other charges which a lot of other players charge. Wherein his total cost becomes not X, but X plus something, right? So you have to disclose everything now. I think more than that, I think it is important what we do is when we meet the customer, we sit with him, we understand his cash flows, we understand his business, we tell him that this is what we think, if you borrow this is what is the use of the money that can be, and this is what you can generate income, and this is what you need to repay back every month. Right? So he understand that if he is borrowing 1 lakh rupees, he have to pay every month 5,000 rupees for 2 years. He understand that every month whether he'll be able to earn 10,000 of that 1 lakh borrowing or not. Right? If he is only earning 4,000 rupees, obviously that is not prudent, right? So, but he understand that, okay, fine, if I take 1 lakh rupee loan, I will increase my stock. If my stock goes by X, my income will go by, X plus something. And then out of that, I will take this money out and pay back the, whoever is that lending institution.
Correct.
But it is very important that you communicate so that he doesn't feel cheated, right? But it's not
Correct.
fair.
Correct.
It has to be a very, very transparent system, to be honest.
Yeah, correct. So in my last podcast with Bimal Jain sir, we were also talking about this, the tax collection that is happening in the country, and which is a major problem with businesses, where I think there's a lot of government revenue gap because a lot of informal economy is being formed in tier 3 and tier 4
Yeah.
cities. And I believe that this might be because when a person sees no option of formal borrowing, he goes for informal borrowing, and then there is no real track of that following, and obviously he cannot show it in his proper income files.
Yeah.
And I think that's where that's how the formalization of economy really helps.
So I think you're bang on. I think this is very important, right? You have to bring everyone in the formal
Right.
economy, right? I think India, because of various tax structures earlier, GST has kind of simplified that a lot. I think
Right.
with GST too, it is even getting simplified.
True.
Right?
Correct.
So I think there is no incentive for anybody to not come in this kind of formal setup and pay whatever 5% or depending on 5% or 80%, depending on what
Right.
goods
Correct.
or services he is selling.
Correct.
I don't think so there is any incentive for anybody to kind of be out of that net today.
Correct.
Right?
Correct.
So there will be a huge formalization drive which will
Correct.
happen post 22nd of September when this kicks in. And that is good,
That
right?
is
See,
good.
what also happens is people don't realize that why formalization is important, right? Because you might still borrow 1 lakh, 2 lakh rupees, let's say, from a money lender, right?
Correct.
But what next? Let's say if you have to borrow 5 lakhs, 10 lakhs, 20 lakhs, 30 lakhs at some
Correct.
point in time, how
Correct.
do you borrow that, right?
Correct.
Banks, you have to go to banks,
Correct.
right? And once you go to banks, they will see your track record. But there is a track record
Yeah, of course.
of borrowing and repayment, right? Because
Correct.
it's not coming in the in your formal CIBIL reports and other bureau reports, right?
Correct.
Because once you borrow, then as a system, as a regulation, let's say if I have lent you 1 lakh rupees, I have to report that transaction to a bureau,
Correct.
right? And then every month when you repay, I report it back saying that, okay,
Correct.
fine, Nitant has paid me back on time. If there is a delay, it shows in your report that
Correct.
it's a delay of 5 days, 10 days, 20 days.
Correct.
That is how you brick by brick, you build your track
CIBIL
record,
report,
CIBIL
yeah.
report, right?
Right.
Credit
Correct.
history.
Correct.
Now, if there is no formalization, there is no
No
credit
credit.
history.
Correct.
He will be confined to the scale of operation that he is currently operating.
Correct.
But if he wants to think big, if he wants to be able to, be able to track his, somebody has to be able to track his financial transaction, banking के through पैसा देना पड़ेगा, लेना पड़ेगा.
कुछ तो solution निकालने
पड़ेंगे ना, because if you just deal in cash, it is what it is,
what it
right?
is.
Beyond
Right.
that, you will not be able to grow.
Correct. It'll be a big contributor in the GDP of the country.
Yeah, so see, I agree. And then what happens is, then you can do interventions, right? If you know that this sector is not doing well, not
Correct.
doing great, you
Correct.
can get policy interventions done depending on that. But
Correct.
but if there is no data, how do you do that interventions today?
Correct.
You do on a hunch.
Correct.
You think that the rural economy is not doing good, let me do something about it. But
Correct.
what in the rural economy is not doing great?
Correct.
How do you get that
How-
data? Unless
Right.
and until it is formalized, you will not be able to get that.
Right. You won't have the data to really work on your
Yeah.
weaknesses. That
Yeah.
is very critical. I also wanted to talk about some of MoneyBoxx's competitors. So I was checking out some of the competition that you have in the market. I got Jai Kisan, Samunati, Agois, and iCart.
So they are not direct competitors, but
Right.
yes, they operate in the agri space.
Right.
They are fintechs and they operate in the agri space
Correct.
because a lot of what we lend is to dairy farmers.
Correct.
More than 50% of
Correct.
our book or lending is to dairy farmers. So there is some kind of overlap in terms of what you see.
Correct.
But yes, they kind of, so they are more, so think of it as if they are like building highways for these players,
Correct.
right? For the agriculture sectors,
Correct.
and we are building bridges, right? So MoneyBoxx is building bridges, borrower by borrower.
Correct.
So we are like, so let's say if he has to get access to a capital or a supply chain, right? He needs capital for that,
Correct.
right? So we provide that capital. So we provide that bridge to be able to get to access whatever these products or services that they are consolidating or selling.
And these, how does Jai Kisan or Samunati work and Aguais or iCard? How
So
are
they
you
aggregate.
different from these?
So they kind of only concentrate on agricultural side of the business. Basically, let's say they would work with FPOs,
Right.
fund those FPOs. They would fund some of the agricultural warehouses, short-term loans,
Correct.
because you need short-term loans when there's a need to warehouse certain produce.
Correct.
Right, for a short period of time, you will need capital, right?
Correct.
But we are not getting into the supply chain of it, right?
Okay, they are into the supply chain.
And then funding some of the end supply chains. For example, traffic, let's say, right? It originates, let's say, from a farmer, goes to FPOs, and then goes to the ultimate whatever,
Correct.
right?
Correct.
Consumers
Correct.
or the wholesalers, right?
Correct.
So they are building those railroads,
Correct.
right? But what we do is we fund the micro entrepreneur. Let's say if he has to grow, if he
Correct.
needs money to grow a certain farm produce, if he needs cattle to produce milk,
Correct.
right? So we provide that growth capital to that particular individual or a micro entrepreneur, right?
Correct.
After he produces, he can sell it through these platforms,
Okay.
right? But first he needs to be able to produce that, right? He
Right.
needs capital to kind of invest in the business,
Correct.
right? So we provide that growth capital to the first leg
First
of that chain,
Right.
where who is let's say a farmer or a dairy farmer or a kirana store, where he would want to sell certain produce, but he will need capital to kind of stock those. He'll need money to kind of increase the stock.
Correct.
Right? Or let's say a small manufacturer, right?
Correct.
So we concentrate on individual micro entrepreneurs in these tier 3, tier 4,
Correct.
who need some kind of a growth capital to increase their business.
Correct. So I would say that you are still kind of sticking to the idea that you are finding that middle gap, which
100%. See,
so the smaller gap, which I think these agri-techs kind of miss out on, or that is not their market.
So that's
finding
not their focus area.
focus
So
area.
they focus more on the supply chain, as I said,
Right.
piece of it, and we focus more on the individual,
Correct.
borrowers to
Correct.
fund their businesses.
Correct. I found something interesting. I couldn't find a competitor in your space who is public, because all these companies who are not your direct competitors, but they have raised funds through venture capital or private equity.
Yeah.
I found only MoneyBoxx as a single agrotech, I would say. There are other NBFCs who raised funds through going public. So just wanting to understand from a layman's perspective, how do you raise funds? Why do you choose a certain way of raising funds?
See, our journey is a little different because, if you look at any journey in an NBFC space, typically you would start small, raise funds from a VC,
Right.
and then you would go to, let's say, a larger VC or a private equity, and then there will be an IPO event where
Right.
the money is repaid back to these investors.
Correct.
Right? We completely flipped that journey. We started with a listed entity.
Correct.
Right? So when we started, we acquired a listed entity.
Correct.
And we put in funds in that listed entity, changed the management, and kind of took over that entity. And from there, we started our journey.
Correct.
So this is not a typical journey that you will see in any NBFC. Typically, you will have a small pool of capital provided by
Correct.
the founders, and then there will be a VC coming in to provide more capital,
Correct.
taking a risk on the idea or the founders to be able to grow that business, and
Correct.
then slowly other sets of investors will start coming in.
Correct.
Right? But our journey, as I said, was very different. Right? So the capital that you raise also becomes very different in terms of the nature of the capital.
Correct.
And the investors that you target.
Correct.
Right? Because obviously, because as a mandate, VCs will not be able to invest in a listed entity, so we cannot go to VCs and raise funds. Right?
Correct.
We'll have to go to people who invest in public markets or listed
Correct.
entities. Right?
Correct.
These are like family offices, individuals, high net worth individuals.
Correct.
Some of the funds, when you get bigger, then funds starts to come in, mutual funds come in,
Correct.
larger private equity players start to come in.
Correct.
But these are different pools of capital available for different entities depending on what cycle, what stage you are at the growth, right? So we've mostly raised funds from individuals, high net worth individuals, some of the family offices, some AIF funds, right?
Correct.
Those kind of very specialized funds who invest only in public markets,
Correct.
right? But as the scale grows, now I think we will look to kind of bring in a large institutional investor when we raise our next round of capital. Because as you grow bigger, the need for capital also becomes larger, right? Because this is the business of raising capital and then funding through that capital by
Correct.
leveraging that capital and then funding the net set of
Correct.
borrowers.
So, I had some data with me of your financial journey, which was quite interesting. The financial year 24, you saw a year-on-year growth of 234%, and all your numbers were going well because the assets under management grew by 116%, the revenue grew by 153.7%, and the PAT was also up by 234%. FY25 comparatively to the previous year has been on the lower side. So any particular reason you are seeing, any industrial shifts that are happening?
See, lending is always a cyclical business, because
Okay.
if you look at lending historically, there has been cycles 4 5 years. There'll be a uptrend, and then there'll
Right.
be a shock.
Right.
It could be anything. It could be related to your institution. It could be market related. It could be some event which has happened,
Correct.
like the 2008 financial crisis, right?
Correct.
It happened because of some crisis in the US, and
Correct.
it impacted everybody globally. Likewise, you will have global crisis. Within that, you will have local crisis or cycles, so as to say. So last year, I think what happened is after the COVID, I think there was a huge growth that happened within the NBFC space, lending space, because obviously we are coming from a pent up demand because the COVID, suddenly everything kind of just,
Whistled out.
Yeah.
Yeah.
So after that, the demand started picking up. A lot of investor money started coming in.
Correct. Correct.
And one thing, what happens with a lot of investor money, I'm talking about the industry, right?
Correct.
What happens with the industry money, with that also comes risk, right?
Correct.
Because there is pressure on the institution to grow at a certain rate, because
Correct.
there's a money, they have return expectations out of that money, right?
Correct.
So for instance, the microfinance institutions, grew from 2.5 lakh to almost 4.5 lakh crore in 3 4 years,
Correct.
which is a huge growth for
Correct.
that segment, right? Almost doubled from 2.5 lakh crore to 4.5 lakh crore, right? And obviously, there was multiple lendings happening to the same borrower by multiple institutions. Let's say if I'm a borrower and I only need, let's say 20,000 rupees from a microfinance perspective. Now, because there are 3 other players also in that district or in that area, they are also going and lending to the same. Okay, fine, you also take money, 10,000 from us, 10,000 from us.
Correct.
So he started over leveraging himself. Right? He probably needed only 10, 20,000. He borrowed 40, 50,000.
Right.
Obviously, that 40, 50,000 has not been used productively to repay that loan, right? He's only used 10, 20 and used the 10, 20,000 extra for personal consumption.
Correct.
Right? So whatever you use for personal consumption is not earning you interest. Right?
Correct.
But you still have to pay.
Correct.
I think so that built up a lot
post-COVID.
Correct. Running up to 2024.
Correct.
And RBI started seeing early signs of it, that there is some kind of a risk building up in the unsecured microfinance and other unsecured products within the industry.
Correct.
It started kind of coming up with policy interventions, guardrails in terms of you can only lend to X number of X number of borrowers can only borrow from X number of institutions in the unsecured space.
Correct.
So that kind of suddenly killed the flow of money in the economy for that segments, right?
Correct.
So people started defaulting. Let's say what they were doing is basically borrowing from one institution and repaying the other, and then again borrowing from the other institution, repaying the other.
The debt trap that I think
right, because they have not used that money, but they have borrowed. They still have to pay, right? So I think once that flow of money stopped, people started defaulting.
Correct.
And there were huge defaults. And a lot of institutions started facing a lot of problems. Right?
Correct.
So that impact also had, because of the fact that we also lend in similar communities.
Correct.
Whilst we were not lending to a pure microfinance borrower.
Correct.
He might be taking a small loan from a microfinance, but he was also taking some loan from us to do some business, unsecured business loan, or to some extent small ticket size secured loans, right? So once he started defaulting, he did not see that I'm only defaulting on one borrower or two borrowers. He started defaulting on all the borrowers, right? Even though he had capacity to, let's say, prepay one or two borrowings, right? So ये होता है ना कि अगर मैंने डिफॉल्ट कर दिया तो मैं सबका ही कर देता हूँ. What is the point of defaulting only to one borrower, right?
Correct.
So that moral hazard,
Correct.
I would say, impacted a lot of institutions who were working or lending in the periphery of the microfinance institutions.
Correct.
And we were also one of them.
Correct.
But we picked up signs early. We started doing a lot of interventions early. In 2022 itself, we started moving a lot of book to secured, because secured, when you have a collateral, when you have the house, the propensity or the inclination of the borrower is less to default because there is a house which he is given as a collateral, right?
Correct.
It's not an unsecured.
Correct.
So we started doing a lot of things post 2022 in terms of building our secured book.
Correct.
Last year, when we saw that our collections were starting to dip because of the fact that borrowers are not paying, we started building the collections team. We did a lot of intervention in our technology, how we kind of reach these players. There are legal teams that we had to hire to be able to kind of rush out notices to these borrowers. So all this takes times to build. But yes, that had an impact last year. But now I think we are back to normal. The growth is back. I think it's like a 5-year, 6-year thing. Every 5-6 years, you will have a 1 year of pain and 5 years of decent growth.
Right.
So I think we have gone through that pain. We have taken whatever interventions that we had to take, and now I think we are back on track.
Correct. So we were talking about privatization in farming sector. Will privatization be good for MoneyBoxx? Like in terms of,
So we are agnostic, to be honest. See, for us, from a business opportunity perspective, I think anything which is good for the sector is good for us, right?
Right.
As long as people need money and we are able to identify those good borrowers and kind of provide those funds to those borrowers, I think we are good enough, right?
Good.
All that privatization does is it accelerates the rural economy even faster. I think which is good in a way, right? Which is really good because then people are more confident in terms of what is happening in those sectors, what is happening to the produce, supply chain gets more stronger, logistics gets better. There's a lot of infrastructure that gets built, ecosystem gets built around it. And for that, you need money, right?
Exactly.
For everything, you need money,
exactly.
right? And we are there to support that kind of ecosystem, right? Because we kind of thrive in that ecosystem. So for us, anything which is good for the sector, I think is good for us. Generally, I think there's a lot of interventions that the government has been doing because the government is very sensitive to how it brings up the rural economy.
Correct.
Upwards, lift it up.
Correct.
I think so. For us, I think it has been a very decent journey. I think there are a lot of things, positive things that are happening in the industry, and anything more positive is actually good news.
Correct.
Yeah.
So, I also feel that this is just my point of view that privatization will really boost the sector well. Plus, I think it will also promote a lot of healthy competition and growth, because I think when there is a lot of government intervention in any sector, the sector becomes kind of lethargic, I would say, because there is no real motive to take the sector anywhere. It is being protected. You need certain protection, but I also believe that there have to be certain steps from the government to increase privatization and have infrastructure in place, because I think infrastructure is the most important need in our country, in all sectors, I think. And I think that I also had some data which suggested that there was which showed that the GDP growth via agriculture and via other sectors. So the data said that the growth rate in a lot of non-agricultural sectors was higher in terms of the contribution, per capita, or you would say in terms of the growth rate. So the line where I see that the agriculture remains kind of stagnated, I'll show it on the screen as well. So it kind of goes like a straight line, and then there's a sudden Post 2020, the other sector's contribution really grew, and from 145,000 lakh crore to 175,000 lakh crore to 201.97 lakh crore to 2225 lakh crore, while the contribution of agricultural and the elite sectors grew at 37,000 lakh crore, 40,000 lakh crore, 44,000 lakh crore.
Flattish.
Flattish, yeah. It remained flattish in nature.
See, it will remain flattish,
right.
because see, it is not productive. If you ask any farmer,
Right.
and if you ask the second generation, third generation of farmers whether they want to do the same thing, they will say no, because it's not productive, right?
Right.
They are doing it because of lack of opportunities.
Correct.
There is a lot of migration which is happening to the urban cities.
Correct.
But it's even there. It is mostly daily wage jobs or something, because you've not, and it is not advisable, right? What I want to highlight is that you have to make your sector so resilient that it has to be very productive, and the second and third generation should be more than willing to contribute and be willing to kind of take that thing forward, right?
Correct.
Unfortunately, in agriculture, it doesn't happen that
Correct.
ways, right?
Correct.
And again, I think we've spoken at the start that why this sector is not productive. It's very protected. It lacks innovation.
Correct.
Technology का use नहीं हो रहा है. There is no capital which is getting invested.
Correct.
Right. So how do you make that sector competitive?
Efficiency,
right?
I think.
Yeah, efficiency is very important, right?
Right.
So it's just that people have, because of lack of options, they continue to do what they do.
Correct.
But it's unproductive.
It's
unproductive, and
I think numbers
and the
speak for
number
it.
speaks for themselves, and
Right.
it's high time that somebody really does something about it and makes
Correct.
it whatever is needed. I think there is some kind of a surgical strike also needed here.
Correct.
To be able to make that sector more productive.
Yeah, correct. I think the government needs to really sit down with all the stakeholders and kind of move this sector towards, because the potential is huge. Of course, this is India's the biggest sector of India.
Yeah.
India is an agrarian country, of course, but I think being an agrarian country, we really lack the kind of efficiency we need in this economy.
True.
Right. I also wanted to talk about, as you mentioned, some of your borrowers have been very small retailers and kirana shop owners who are very connected to us in a way, because all our childhoods we have really gone to kirana shops and bought stuff. Any success story that comes to your mind that has reached to you guys?
There is a borrower, Rekha. She is there in MP. She runs a small kirana store out of her front house, right? Like, in a small, you have a backyard, and then in the front you have a small shop to kind of small things that you can sell, right? Small kirana shops. And she is a widow, and she had to kind of take the role of running that shop, because unfortunately husband died in an accident, so there was no other person to do that job, and then she has a kid, right?
Correct.
Because of the fact that it's a small shop, that is the main earning resource or source of that family, and it was not enough for them, right? So somebody told us, through somebody we got to know that she might need some loan, and we can provide some loan, and there is an opportunity for us to be able to lend that.
Right.
So our credit officers, our sales officers, the loan officers went to her, understood how long it is she has been running, and what is the income, cash flows, and then we gave her a loan of 1 lakh rupees. So she was probably qualifying for 70,000-80,000, but we took a call saying that okay, fine, we'll need to give her the minimum. We took a loan of 1 lakh rupees, and she used that money to stock more items, service more customers, and she used it in the most efficient way. I can say the capital that was given, which was 1 lakh rupees.
As a lender, that's a very happy thing. It's a very good thing.
Yeah, because we knew that we were very skeptical, because she is managing the shop alone, whether she'll be able to run it or not. But after doing the due diligence, we said, okay, fine, we'll give her a loan of 1 lakh rupees. In 1 year, her sales doubled. What she was earning per month, let's say if she was earning 10,000 rupees per month, she started earning 15, 16, 17, and ultimately 20,000 rupees per month with that 1 lakh rupee capital. She doubled her income.
Okay.
with that 1 lakh rupees in a
Correct.
year's time. So
Correct.
that loan was for 2 years. After 1 year, 15 months, she came back and she said, okay, fine, I want to set up some small fancy store kind of a shop besides her own shop.
Home shop. Correct.
Because see, once you deploy that capital efficiently, you start earning, your confidence
grows. Yeah. That's
right.
Yeah.
That is huge
That is
for a
huge.
person of in that particular locality. She came back and then she took a loan of 2 lakh rupees from us. And now we were very confident. Now we
Yeah.
were very confident.
Yeah.
Now she'll be able to deploy that
Correct.
capital, right?
Correct.
So there are so many numerous stories like this, right?
Correct.
Where what happens? People don't even understand that there is an opportunity to borrow and increase their business, because either banks turn them down or money lenders charge them so much that they don't even understand. There are players like MoneyBoxx operating in the vicinity who can
Correct.
provide them with this kind of small ticket size business loans,
Correct.
which they can use it efficiently to grow their business and probably
Correct.
earn a higher income what they were earning, right?
Correct.
So it's a challenge finding such customers as well for us, right?
But when you do, that is the best thing that ever happens, because then that customer becomes your kind of a long-term customer, and you're
100%.
happy to lend them money because you're seeing so much entrepreneurial growth.
Yeah.
And you always believe, you actually contributed to the growth of the country, because I think tier 3 and tier 4 cities is where
So
the
lending
actual
with a
growth
purpose,
lies.
right? Lending तो आप कैसे भी कर लोगे,
हाँ.
right? But lending with a purpose. I
Right.
think this is what lending with a purpose is, that you're actually fueling the dream of that small family
हाँ.
or an individual, right? He
बिल्कुल.
had the dreams, he had the capacity, capability. It was somebody who needs to come and tell him that, okay, fine, you have this.
You have this. Yeah.
The only thing lacking is money, and we are ready to kind of support you guys.
Yeah, I think that is kudos to you guys, because I think ये देश हित में काम हो रहा है. I would say.
See, you're building so financial inclusion is what? This is financial inclusion, right?
Correct.
You're bringing people who are deprived of capital, who are deprived of growth. You're bringing those people, you're giving them opportunities to be able to dream, grow, right? They also need to have equal opportunities, right? Why
Right.
should only people with huge resources and access should have that opportunity, right? People
Correct.
in every walk of life should have that opportunity. Equal opportunity is very important, and you give them opportunity, they will flourish.
Yeah, of course. I think that platform is what they are asking for. I also wanted to talk about a recent issue, and it was kind of I was researching on it, and there's been floods in Punjab recently, which has really affected everyone in Punjab, and there's a lot of call out for help. And I would really all my viewers, I would really say that if you can contribute to Punjab floods in whatever way possible, please do, because it's a really serious issue that's happening there. On ground, I think you guys must have been very aware of what is happening, because it's an agrarian state. A lot of agriculture takes place in Punjab. So how bad is it, and what is happening?
One of the biggest risks. So when we started this, we never priced in climate risk, to be honest.
Okay.
Right? We never priced in. We never thought that climate risk is going to be one of the top risks at some point in time in our journey, which we'll have to start factoring in. Right?
Correct.
See, floods happen every year, right? Some parts, last year also there were floods. This year again, it's bad. It's getting from bad to worse, to be honest.
Correct.
Right? So now, I think this is on top of our mind. The top between me, Deepak, and others, when we discuss what are the risks that we have to factor in, other than regulatory, other than other risks that we factor in, I think it's climate risk is also very, very important, and especially if you're lending in the rural, markets. All right, and especially if you're lending in markets or pockets where there are floods which are very regular, rains are erratic. There's something or the other which keeps happening from a climate risk perspective.
Correct.
I think we have started building that risk in our model, saying that, okay, fine, when we scope a particular area now, we see what kind of risk that area runs from a climate perspective. Is it coastal area? Is it flood prone? Is it too much of rains?
Correct.
Which can hamper economic activity?
Correct.
right? And then you want to be away from those areas because it impacts your business and impacts the portfolio everywhere, right? But this is a huge risk. I'm telling you, in lending now, this will become in some time. If people don't price in this risk, it will hit them very badly. I think we have started factoring in this
This
kind
risk.
of a risk very seriously now.
But don't you feel like if there are people who need money in this area? I mean, because climate is not in their control, neither it is in
See
your
what we
control.
do. I'll tell you, right? I think. See, I understand where you're coming from, but
Correct.
um, uh, so we have a fiduciary responsibility to our shareholders, to our
Correct.
investors, right?
Correct.
And in times like this, it's happened last year also, we tend to go slow in terms of recovering monies because we know that there's the whole farmland, everything is washed away, right?
Correct.
And we know that there is going to be some impact for some time till they recover.
Correct. Yeah.
Till the economic activity starts to come back, and
Yeah.
they will. And these are people who are not defaulters, right?
Yeah, they're
It's
not
just
defaulters.
that
It's
they are
if
like
the situation is not
situational.
working again,
Yeah,
it's working
yeah,
against them.
yeah.
I think it's not
It's
in
just
their
that they'll
control.
come back. So we
Right.
go slow on recoveries. We don't push hard.
Correct.
We try and be there as much as possible. But beyond that, right?
Correct.
So we are not. We don't have the power to waive off those loans. To be honest.
Correct.
Right?
Yeah, of
Right?
course.
We can go slow. We can be with them. We can give them time to recover and then probably come back.
Correct. I think that is the only way because this is
Yeah.
something that is. I also feel that, yeah, I mean, again, floods is another problem which comes back to infrastructure because I think, again, the tier 3, tier 4 cities and all these cities where flood is a big problem, there's lack of infrastructure, which is floods are also there in the urban cities. So we can't say that, it's really an infrastructural problem. But then I think a lot of a lot of rural India is based out of agriculture, and I think infrastructure is the only way we can really figure this problem out because बारिश होना है, and there's going to be extreme rain, there's going to be everything, but then if you have the right infrastructure in place,
I think everybody has failed in that aspect, I'll tell you. So these floods are not something which has happened suddenly this year,
it's not
right?
new.
Floods happened last year in Himachal
Every
also.
year, yeah.
Every year it happens.
Every year.
So
It's
much
getting
of
worse.
destruction. So much of destruction.
Every year it's getting worse.
And if you do mindless infrastructure growth in eco-sensitive zones, or if you don't build right infrastructure,
the right infrastructure. Yeah, it's the right infrastructure.
I think nature will have its own way of taking its own revenge.
Yeah, I think the
Right.
main is right infrastructure, not just infrastructure.
Infrastructure has to be right. It has to be thought through. Ecologically, you have to think through what is going to be the impact of that, whatever you are building in an eco-sensitive zone. I understand that, everything is important. When you're a developing economy, everything that you do contributes to positive growth in the GDP. But yes, we also have to be responsible, sustainable, right? Sustainable growth बहुत ज़रूरी है. I think if you just mindlessly keep doing it's not difficult. It's not difficult if people think, if the government thinks that it has to do it in a certain way, in a sustainable way. You just have to bring everybody on board, understand what is the need of the hour, how do you do it. Maybe it takes a little longer, maybe the costs a little higher to be able to do that, but it's doable. I think it's very much doable. It's just that somebody has to take a very, very strong macro view of those things. I think it's all localized. There are local compulsions. Then the central compulsion, and there's no coordination. And because of this, what happens is people are just doing what they want to do, and then this is the result.
Correct. I was very keen on understanding one topic which is, I think, very relevant, and I've been talking about it in all the podcasts. It is AI, of course, and how is it impacting agriculture, and has it reached your sector?
AI as a concept, I think, is gaining a lot of traction, and there are now so many players innovating so many technologies related to crops.
Correct.
Identifying crop patterns, identifying weather patterns, and how it impacts the crop output, right? There are so many things happening. Um, but specifically to MoneyBoxx, I think what interventions that we have done is, I think because cattle, livestock is our largest portfolio.
Correct.
And the biggest risk in the cattle book is identification of a cattle, right?
Correct.
It's very easy because there is a technology to identify human beings, right? Through biometric, iris.
Correct.
But in cattle, it doesn't work like that. You have to get a muzzle technology, which is the face, and there are certain aspects of the face which you need to capture to be able to identify that cattle as a unique ID, right?
Correct.
And this technology is, there are people kind of doing in bits and pieces, but what we have done is, it took us a year to be able to develop that technology, but today we have that and deployed across all our branches, where through the use of visual AI, there is an application through which we click pictures of the cattle, we identify the uniqueness of the cattle, we create a cattle ID. It's like a cattle Aadhaar ID, right?
Okay.
Where we say, okay, fine, when a customer comes to borrow against a cattle, so we kind of create that ID and tag that cattle to that particular loan account, right? Through that visual AI.
Okay.
Right?
Okay.
And it's not easy because there's a lot of computational power that you need. There's a lot of technology that you need to be able to identify a certain breed of cattle. Now, with that cattle, what we are also identifying is what is the breed of the cattle, right? Otherwise, there is a human intervention required. What kind of breed it is?
Correct.
Cross breed है, क्या है? Cow की क्या breed है? Buffalo की क्या breed है? Right?
Correct.
Then we are also identifying the age of the cattle. It's very difficult to if I put 5 cattle in front of you and I tell you tell me the age of these cattle, you'll not be able to tell.
Correct.
Only a very specialized person, either who is owner of those cattle or a vet person who does a certain kind of examination, he'll be able to tell you the cattle age.
Correct.
And why that cattle age is important? Because that cattle age is linked to the lactating cycle of the cattle.
Correct.
So they are fixed lactating cycle that a cattle goes through.
Correct.
And each lactating cycle, there is a milk produce or yield which happens, and with each increasing lactating cycle, the yield starts to go down.
Correct.
Right? So it's very important from an income estimation perspective and a risk assessment perspective that we identify what is the age of the cattle.
Oh, okay. Okay.
So we can correctly estimate कि हाँ इतना ही दूध देती होगी. That is the average milk that the cattle would be giving every day, right? So that is one technology that is an AI, true AI that we have built in house, right? Now I think the second phase of that technology is to be able to tell visible diseases of the cattle. So there are 13 to 15 visible diseases. Just by looking at the cattle, you can tell you that cattle has a certain disease, and because of that, the yield of that cattle might be down, right?
Okay.
What is it that is harming the cattle, and what are the interventions needed because of that?
Correct.
So that is the next phase that we are now undertaking, and it will be ready in, let's say, next 3 to 6 months.
Correct.
That will complete the eco cycle of the cattle management. So one is we are identifying the cattle, so the frauds related to that cattle will go down, because let's say if I have funded that cattle and if my neighbor wants a certain loan, I can loan him my cattle and he can get funding on the same cattle, right?
Okay.
How do I identify that whether it is the same cattle or not?
Correct. It can be a lot of mixing and matching.
So it will be a lot of double funding, triple funding that can happen.
Right.
So this will help us to identify those borrowers who are trying to fund on existing cattle that we have already funded,
right,
in the vicinity, in the neighborhood,
right.
Plus it will give us a strong database of what kind of cattle we are funding, what lactating cycles we are funding, what breeds we are funding, what is the repayment behavior of those customers.
Correct.
So a lot of data analytics will start to come out in a year's time.
Correct.
From those fundings that we have done for those cattle, right?
Right.
Insurance is another use case which is very important. Today, let's say if you have to go out and take an insurance on a cattle, let's say it is very prohibitive. For 2,000 rupees, you have to take, they will give you one cattle insurance for 30,000-40,000 rupees, 2,000, 3,000, 4,000, depending on insurance companies, right? the risk that they run is because if something happens to the cattle is dead. How do they identify that it was the same cattle that they had provided insurance on?
Correct.
Right? Either they do an RFID tagging or there's something that they have to do. Right? It's a
Exactly.
cost involved, human element. Somebody has to go verify,
Check.
and then all that cost is there, time is there. Through this technology, we can say that this is the cattle that you have provided insurance for, and if something happens to that cattle, we can identify that cattle through technology that this was the same cattle that you had funded
Correct.
or provided insurance for.
Correct.
So the cost of insurance from 2000 can come down to 300 rupees, 200 rupees, or 400 rupees.
Yeah.
1/10 the cost.
Because of the human intervention that will go out.
That will go out, and the technology will be able to clearly identify that it was the same cattle that you had funded.
Correct. Correct.
Right?
Risks have gone down.
Risks have gone down, and you are very certain that yes, now you are taking a certain risk, and you are able to price that risk better.
Accurate risk taking
Yeah.
will increase, I think, because of AI, and
Yes.
the accuracy goes up, and I think the efficiency indirectly will go up as well. Just to understand the, because we understood MoneyBoxx is lending to a lot of small retailers. I also wanted to divulge a bit into, you use cattle as a collateral against all the dairy funding that you
No,
do.
we don't use that.
How is it done? So what is the role of a cattle here?
No, so we are funding that business. For
Right.
us, that cattle is not as a collateral. We are not taking cattle as a collateral. We are still classifying that loan as an unsecured loan.
Okay.
Unless and until that person who is getting funded against the cattle is giving me his property as a collateral.
Okay.
Right? If he is giving me property, then only he is a secured.
Okay.
Otherwise, he continues to be an unsecured
Secured
loan.
Cattle is, I think, you're just trying to understand how much business will he be able to generate
Yes.
through the
Yes.
age and the efficiency of his
Yes.
cattle, because cattle are basically his machines, I would say.
Yeah, it's
Indirectly.
assets.
Assets.
Yeah,
Right.
basically.
The assets. So you're just classifying
Yeah.
their assets
Yeah.
accordingly, and then you can assess the risks that are involved. Right. So I had some data on MoneyBoxx. This was something that I was keen on talking about. I was checking out the market shares that you hold in the different places. You can correct me here. So Madhya Pradesh is your largest market,
Yes.
as far as I've understood. Then comes UP. Madhya Pradesh has 31.3%, UP is 16.6%, Rajasthan is 14.2%, and then Haryana is 11.9%, and then Punjab is 9.3%. All I've seen is all these are the northern states, and the south states hold accountable for 4.3%.
Right.
What is the plan for going south? I mean, I think south is also very big on agriculture.
South is a very big market, and especially when we are doing a lot of secured funding, I think South is a proven market to be able to do secured.
Right.
We only started South last year. It's just been 7-8 months, and that is why you see a very small percentage of our AUM in South. But I can tell you that in the next 2 years, this is going to grow very, very fast. South as a component, as a block, is going to grow very fast, along with UP, Bihar, and Gujarat. I think these are the focus states for us now. MP, we have done a lot of expansion. 30% is still with MP. I think that share will start to come down as the share of South and Gujarat and Bihar starts to increase.
Correct.
And Rajasthan also at some point in time will start to pick up.
Correct.
But Punjab and Haryana will remain where they are. We are not expanding. I think climate risk is what I told you about, right? We discussed. I think that is something that we are starting to price in Bihar.
Which state are you seeing the highest climate
Punjab,
risks?
I think. Punjab, to some extent Haryana, because it's border with Punjab. So floods, some parts of Haryana get impacted by that. And it's a small state also in that sense, right?
Correct.
There's a lot of activity, economic activity, but it's still a smaller state geographically. Right? Punjab, again, a large part of Punjab is borders with international borders, right?
Correct.
So we don't want to be present there. There are risks, geopolitical risks, right? So wherever there is an opportunity within Punjab, I think we are more or less there. Within Haryana, I think we are there, here and there. There might be some pockets which we might want to tap. But I think UP is still untapped. There is a huge opportunity, and the kind of impetus the government of the day is having on infrastructure, on growth, on clusters that they are building, micro activity clusters that they are building, economic zones that they are building. I think there's a huge opportunity in UP to be able to grow. Bihar again looks very different from outside, but I think we have been there now almost 18 months. I think
Correct.
we have had a very good experience in Bihar. Uh, the team is very good. They have found opportunities, pockets where we can grow our secured book
Correct.
very fast.
Correct.
And so Gujarat, everybody knows, right? Gujarat is the state which which ways has one of the highest potentials when it comes to business. And then South. So I think these are the 5-6 pockets, I think, where you will see the maximum growth in the next 2 to 3 years.
Correct. I was wondering, how do you promote yourselves in tier 3, tier 4 cities?
There's no promotion, I tell you, Nithan. It's not a business that runs on glossy ads.
Correct.
Right? You cannot have yourselves on billboards and then expect people to come. I think this is a business of trust.
Correct.
It has to be built brick by brick.
Correct.
You have to be on the ground with the people, understand their problems,
Correct.
provide solutions, simple solutions, be
Correct.
transparent, show them performance, and they will come back.
Correct.
Right? And that is, I don't think so we have spent even a single penny on any marketing in the rural.
Correct.
Right? Whatever small marketing we do on LinkedIn and other, because more from an investor community. Right? But from a customer's perspective, I don't think so. None of the customers walk into our branches. We reach out to the customers.
Okay.
Right? So our sales officers, loan officers, the RMs, they travel 70, 80, 100 kilometers daily.
Correct.
Visiting these customers, understanding if there's a requirement for a loan, sitting with them, telling them, right, what is the rate of interest, what is it that you can do, what are the things that can happen if you take a loan, what is the repayment. So you have to be there with the customer, sit with them, understand, उनके संग बैठ के चाय पीना पड़ेगा, उनके प्रॉब्लम समझना पड़ेगा, then you'll be able to provide solutions.
Correct.
Right? I don't think so ad works, marketing works. Trust is what you have to build.
Yeah, and I think the customer lifetime value is very high, because
Yes. So this is a relation. See, banking was always a relationship business.
Correct.
It's in the digital age, it's gone away to an extent where if you talk to our parents, right, they always want to visit a bank branch and do
Correct.
transactions.
Correct.
Right? Because it's not just going and doing a transaction, it's a kind of relationship building. They'll speak to him, understand.
Correct.
The branch guy will speak to the parents, understand. It's a relationship building, and that is why you stick to that bank or a branch, right? It's always a trust. Where money is involved, I think trust becomes paramount.
Critical.
Yeah.
I heard from you about Josh once. We were talking and right now, and then you told Josh is one app that works in tier 3, tier 4 cities. It's similar to Instagram or like a TikTok.
It is.
And I was checking that out. I was really surprised to know it has 300 million users.
Yeah.
And it is one of the top 20 socializing apps in the world. It is there in that list. And it is Indian. The only Indian app that is there. And and do you kind of reach out to like people?
We've not done much. See, we've not felt the need to be able to see unless until you're not able to grow. So we have grown 100% year on year, to be honest. Right? Whatever capital we have, I think we are putting it to use in a very efficient way to grow. So there's Share Chat, which is very popular. Like, there's one app which is vernacular Share Chat we have. It's very popular. You said about Josh. There are other social media accounts or apps that people use, but we've not. So we have our own app, which is the Sikka app, right?
Okay.
Where we try and kind of sell some of the other financial products like insurance. I think people should really go and watch and see the kind of the insurance products that we sell. I think it is a very simple to understand, no frills insurance for 2 people, 2 lakh coverage, health benefits, all included. for a 3,000 rupees premium, I don't think so you'll ever get it in any. You go to any insurance company's website, Policy Bazaar, or anywhere, you will not be. That is customized and built for rural India, right? People, health insurance will not typically, they will sell you for less than 5 lakh rupees minimum is the coverage that you will need. And with age, it will keep on increasing the premiums, right?
Correct.
Here we have flat premiums,
Correct.
3,000 rupees, whether you're 18 years of age or 65 years of age.
Correct.
We are not charging you differential premium depending on your age.
Correct.
Right? We are not telling you this is not covered, that is not covered. Everything is covered, and there are pre-existing diseases which are also covered. A, B, C, D is also covered.
Correct.
Right? So it is, and that we sell through our network of branches and other avenues that we have. But I think if people have to go, and so these are some of the product that they want to buy gold, 10
Correct.
rupees gold, digital gold, they can go and buy that, right? Savings is very important, right? Because for any household in rural, savings becomes very important. And you might not, with the price of the gold today, right?
Right.
Even if I have to buy a 1 gram gold, it is very expensive for a rural household today.
Yeah, correct.
Right? Physical gold, right?
Correct.
So we are saying you don't have to have that kind of a 1 gram, 10,000 rupees. You don't have the savings, fine.
Fine.
You have 100 rupees, invest your 100 rupees in gold.
Correct.
Right? If you have 10 rupees, invest 10 rupees in gold.
Right. Like start
Start
slow,
small.
but start small.
Because
but
see, gold is a very, very sentimental thing for any household in India,
Correct.
right? And you want to keep buying because they buy for various life events,
Correct.
right? So we kind of say that, okay, fine, don't have 10,000 rupees, you buy for 100, 200, 500, whatever you can buy.
Correct.
You can do a SIP kind of a thing in gold every
Yeah.
month,
Yeah.
every day, every week, whatever time frame you want.
Correct. And yeah, I think gold is an important asset to always own, and it will always be good in long term.
Yeah.
I don't think gold is going anywhere with other things coming in. Yeah. So we've talked a lot about MoneyBoxx, and I was also keen to know about Mayur Modi in general. So can you tell me about your years before MoneyBoxx, and how did MoneyBoxx come into picture? Did you have a mindset to be here?
See, I'll tell you what. So this, being from a family where my immediate family was not into business, but yes, all my relatives, cousins, they were all in business. And being from a Marwadi family, I think that bug is always there in
the
you
blood.
to be able to, yeah, it's there in the blood. You just need that one opportunity, or you need that leap of faith to take.
Correct.
Where you want to try it out.
Correct.
Right? You want to give it a shot. Works, not works is one thing, but at least you're satisfied your internal ego or whatever, that you wanted to do this and you've tried it, worked well, it didn't work, you can go back to what you were doing earlier, right?
Correct.
So I think before doing this, I was in HSBC. I was a banker for a very long time, 15 years.
15
HSBC
years.
for 10 years. Before that, JP Morgan.
Correct.
Worked in all MNCs, had a very good life. Decent salaries,
Correct.
weekends were to yourself,
Correct.
enjoying holidays, everything. I don't think so. Beyond the point, I don't think so. That is the kick, right? I think the kick is, what are you building? What have you built for yourself, for others, that you can tell that this is something that you have contributed, right? And that was something that was kind of eating me, and to a large extent. And when this opportunity came, right, Deepak and I, we met in 2002 in our first job in GE Capital, right? And since then we have been together as friends, colleagues. We moved together for a couple of jobs, and then he came back to his hometown in Delhi, and then now Gurgaon. And I came back to Bombay, right? But we used to always discuss ideas, क्या करना है, कैसे करना है. And sometime in 2017, this kind of clicked. We were doing this Yatra of Gangotri, Jamnotri, I remember, and then it was kind of bugging me that I have to do something, and this is when that moment will never come, because you keep looking for the right moment, it never comes.
Yeah.
So as soon I was back from there, I called him. I said, let's do something. Let's sit down because this is high time. We are like in our late 30s now. If we don't do it now, I think we'll never be able to do it. Touching
Yeah,
40s.
yeah. It is that leap of faith has
Yeah,
to
yeah.
be
You have to
taken.
take that leap of faith. And I am telling you, Nitan, once you take that leap of faith, I know everything will work out.
Correct.
Everything, you do the right things.
Correct.
You have the right mindset. You keep
Correct.
going. Uh, don't think about results too much. I think what people tend to do is they overthink about results first.
Correct.
That ये आना चाहिए, ये result आना
Too much
चाहिए.
calculating.
Too much calculative. It is never like that, right? It is, you have to start on a path, and it will keep.
You will figure out
You'll
things.
figure out. You will
Yeah.
figure out, and it will work out. It is. You will never figure out everything at the start.
Correct.
Right? You just have to take that leap of faith and start that journey, and
Correct.
you will get there.
Right, right. I think when you have the right objective, the right
Yeah.
path, and the right thought, I think that
True.
those things will work out.
Yeah, yeah.
Is what
You have to do it for the right reasons.
Right reasons.
You have to do it for the right reasons. You need to have passion. There are so many things that you have to forego, so many sacrifices you have to make.
Yeah.
And it's not an easy journey, right? You're alone, and then there's so many ups and downs. Everybody, and we all know the odds are stacked against you, right?
Correct.
Out of 100 businesses that start, 98 fail.
Correct.
So odds, even before you start, are stacked against you.
Correct.
So you're trying to be amongst that top 2%.
Yeah.
Who can survive,
Yeah.
right?
Yeah. The risks are anyway very high.
Very high. And then if you're starting something wherein huge, your life savings are involved.
Correct.
Savings of your immediate family, relatives, friends, everybody's money is at stake, because I've convinced everybody to put their monies into this, right?
Correct.
And imagine the kind of pressure, the risk that it carries, right?
Correct.
The whole reputation is at stake.
Correct.
So you have to do it for the right reasons, right? I think you have to, if you do it, it works out. And you have to have faith, and a lot of faith.
Correct.
Small faith is not going to work. A lot of faith.
A lot of faith.
Yeah.
You talked about weekends. How are weekends when you are doing a job? And
Weekends are very cool. Fridays, evenings, BlackBerry shut. No office work, no calls. You enjoy with the family. You go out, you plan in advance.
Yeah.
There's nothing which is going to bother you, right? Because the ecosystem is such. Your boss doesn't bother you, the boss's boss doesn't bother the boss. So that ecosystem is built such, right? You work very hard on the 5 days, and then after 5 days you kind of chill. Right? Here there is no Friday, Saturday, Sunday, right?
Yeah.
Absolutely no. There are so many times where my HR has to come and tell me, sir, tomorrow please don't come to office because tomorrow is a holiday. Is like a national holiday.
Yeah.
Right? So please don't come to office because there will be nobody. Then I have to tell my admin, okay, fine, if I plan to come, okay, fine, at least make some arrangements. Right? Because you are not in that mindset or frame of mind that you are thinking about holidays. You're thinking whether tomorrow is a holiday or the after tomorrow is a holiday or not. I understand, different people will have different perspective, but once you have gotten into that zone, you don't think about times zones, right? Something you want to discuss, let's say if at 10:30 I find something that I want to discuss with Deepak, I call him up or he calls me up. And then we don't think whether it's too late or not. If there's something to discuss, this is the time to discuss, and then we do calls for 1 hour, 2 hours, it can go up to 12, whatever.
Yeah.
You're not constrained by times, by days, things that you want to discuss. Whatever is important is important. You have to do.
Correct. That's I think I just wanted to talk about you to understand what your journey has been. And I think weekends change when you are working, when you're doing something, you're building something from scratch.
Yeah.
So that happens. I think that is all I had in my head. I thank you so much for being here. I just wanted to understand if you want to talk about anything that you feel is relevant for our viewers who probably are in that same zone of getting out of a job, and they've been there in that space for a very long time. It is sometimes very difficult to let go of a comfort zone of and while you're expertising very well and you're doing very well in that space, to switch to a space which will be completely new to you, what is your key takeaway, those things that you were to say?
See, I'll tell you, right? If you really uh, are passionate about doing something, right? Uh, Passion is one thing, right? Because
Right.
that is where the drive comes from.
Correct.
But you need to be uh, also sure about what you're getting into, how you want to get into.
Correct.
Just blindly getting into it is not going to work, right? You need to do a
Correct.
lot of groundwork, research, right? Use your time, right? Like you said, if you're a professional, you have weekends to you,
Correct.
build that playbook, right?
Correct.
Let's say if you want to start something, go and visit the real customers or the problem statement, understand what it is, what are you trying to solve.
Correct.
uh, don't get don't get illusioned by the fact, disillusioned by the fact that you're building something and that person, and that is a problem statement. First, identify if there's a real problem,
Correct.
and if there's a real problem, identify what is the solution that you want to provide and how you're going to go about it, right?
Correct.
You need to understand what is the capital required, what is the technology, what is the competitive landscape. So there's a lot of background research you need to do.
Correct.
Just jumping into something assuming that it's going to work, it's not going to work, because there is a lot of hard work that has to go into building that phase,
Correct.
right? So my only thing is, please do what you feel like doing. It could be anything. It could be your passion to do podcast, it could be your passion to do your singing, anything, or traveling, anything, but do it with a lot of responsibility.
Correct.
Understand what goes behind it. There's a lot of craft which goes behind it.
Correct.
There's a lot of research. There's a lot of nuances that you need to understand, because it's a hyper competitive. Because what you're thinking, 100 people are already thinking and maybe acting on
And
it
are better than you at
better
that.
than
And
you,
they're
right?
already there.
Already there,
They're
because
already
just that you
grown.
have not discovered doesn't mean that it's
It
not
is not, yeah,
not there,
of course,
right?
Of course.
So you need to be sure, you need to be very, very competitive, you need to put in your heart, and you have to take a lot of sacrifices. But I can tell you one thing, right? If you do all of this, the rewards are exponential.
Correct.
The rewards, there is no match for the rewards, all right? But don't chase the rewards. I think it will come. Whether it is money, fame, or whatever that you are chasing,
Yeah.
I think that will come. Don't chase that. Chase what you want to really chase, but do a lot of groundwork. Be very, very meticulous about planning, understanding. Get the right partners with you, right? Because it's, if you want to do something of your own, which is fine, but if you get a partner, there's a lot of check-ins that happen, right?
Correct.
I might be thinking, but that is not necessarily the right thinking, right?
Correct.
So somebody who is very, very honest, who can tell me to my face that this is not something, I don't think so, this will work, and this is why it will not work. So you
Correct.
can reflect upon that. Otherwise, people will say, yeah, good, go ahead and do it.
Good.
They are not going to give you very, very honest and real feedback, right? So you need a partner, co-founder, partner, whoever it is,
Right.
right? Who can give you those check-ins, saying that, okay, fine, if you're doing this, this is the things that probably you missed out. Maybe these are the things that you need to consider, right?
Yeah. The feedback
So
mechanism.
feedback mechanism is
needs to
very,
be
very
there.
honest. Loop is very
Right,
important,
right.
because that is how you improvise, right?
Correct.
So I'm saying these are small things. There's a lot of groundwork that you need to do. Please do that, because it's, when you fail, it's not an easy place to be in, right?
Correct.
Because there are so many emotions attached. You have given your so much of time, effort, money, everything,
Correct.
and then if you fail, because of the reasons which were in your control, right?
Correct.
All the groundwork that I'm talking about, you can still fail, and there's no shame in failing. You can still do something else, but be sure that you have explored all the aspects of that
Correct.
thing that you want to do.
Yeah, I think
Yeah.
that is it. Thank you so much for giving us your time, and I think a lot of things that we wanted to talk about more, but I think we'll do another round of podcast with you for sure. We'll divulge more into more depths of what we've discussed today, and I think finance is something that a lot of people want to learn more about. Investing is something a lot of people want to understand, though we have not talked about a lot about investing and finance in general, but I think that is what we'll do next, and we'll surely have some good content on that.
Definitely, and I really thank you. I think this was a good opportunity, good discussion,
Yeah.
and you're doing great. Keep doing what you're doing.
Yeah. Thank you so much.
Thank you.
Thank you. Thank you so much for watching, guys. Please कमेंट, लाइक, शेयर एंड सब्सक्राइब. आप कमेंट सेक्शन में हमें ये ज़रूर बताएं कि इस पॉडकास्ट से आपको क्या इंसाइट्स मिले हैं, व्हाट हैव यू लर्नड. एंड अगर आपके और क्वेश्चंस हैं तो प्लीज़ कमेंट सेक्शन में बताएं. आप किस टॉपिक पर पॉडकास्ट चाहेंगे वो हमें ज़रूर बताएं. इससे हमें मोटिवेशन मिलती है to really cater to your needs and the content that you want more on. आप सब्सक्राइब ज़रूर करें, इससे भी हमें बहुत ज़्यादा मोटिवेशन मिलती है to make more such content. Thank you so much for watching, guys. Stay tuned for more at BFS.